A couple of weeks ago, a famous hedge fund manager named Bill Ackman came out and said that he was betting against 30-year Treasuries in size. Treasuries are US government debt that you can invest in. And if you want some basic information on what Treasuries are, you can read my free ebook on investing, which link to I post in the description of this video. And Bill Ackman is not alone in betting against Treasuries. Reports indicate that a record number of hedge funds have also bet against Treasuries in recent months. And you might wonder why. Now, the dynamics of the Treasury market are complex. So I don't want to explain all of those dynamics in one video, but let me pick the most important one that I think Bill Ackman highlights. And that's the supply-demand dynamic in the Treasury market. Just like any market, the price of Treasuries are determined by supply and demand. When there's more supply than demand, prices go down, and vice versa. So let's look at both the supply and demand dynamics of Treasuries. On the supply side, the US government recently raised its debt ceiling so that they can finance more of their spending by issuing more debt. That increases supply. Now on the demand side, we need to look at who buys and holds the Treasuries. And the two largest holders of Treasuries are the Federal Reserve, which is the US central bank, and foreign governments such as Japan. Now in the past decade, the Federal Reserve has bought huge quantities of Treasuries in order to execute its quantitative easing program. But for the past year or two, it's been actually doing the reverse. They've been doing quantitative tightening, which means selling off the Treasuries that they had initially bought. So you would be able to count on them to buy the newly issued Treasuries. And as for foreign governments, some of the major holders of Treasuries, such as Japan, have also been selling down their Treasury holdings for economic reasons that I won't get into in this video. So in summary, the supply and demand picture looks bleak. More supply, less demand, and that's why Ackman and other hedge fund managers are betting against Treasuries in size. Now, does this mean that you should also try avoiding holding Treasuries in anticipation that the prices will go down? Well, not necessarily, because there are many factors you have to consider in buying and holding an investment, and there are some good merits to holding long-term Treasuries. That said, I myself, I'm a little hesitant to hold Treasuries in size, and for that reason, currently, I don't have any long-term bond exposure, but that might change very quickly. The purpose of this video is not to give you advice on whether you should hold long-term government bonds or not, but rather to explain the dynamics that are affecting the markets today. So I hope you enjoyed this video, and if you like it, please subscribe to my channel.